Is Lumen Technologies a deep value or a value trap? That's the big question we're tackling today. Welcome to Global Value, and in this video, we're going to dive deep into a thorough analysis of Lumen Technologies LUMN stock, emulating none other than Warren Buffett, one of the greatest investors of all time. We'll look at the key numbers that Buffett values most, and then we'll calculate 3 different fair values for Lumen Technologies to really understand what it's worth in today's market. Make sure you stay with me till the end because our combined fair value and rating might just take you by surprise. And there's more. I'll also reveal a crucial bonus metric that could be the deciding factor when adding LUMN stock to your portfolio. So, is Lumen Technologies a golden opportunity waiting to be seized? Let's find out together. Right now, Lumen stock trades for $1.56 per share. 2023 has been horrible for the business. This is terrible compared to the market when the S&P 500 is up 20%. Lumen has declining business segments and a lot of leverage. They have new management in the last couple of years. The company's made decisions that have seen longtime shareholders flee the business. They cut their dividends completely. This was at a huge yield before this, but now the company needs to make better use of this cash. Time will tell how that pays out for Lumen. In the last 5 years, their stock price is down 91% overall. In the last decade, it's worse. Their stock price is down 95%. When we go back before the global financial crisis, in the last 18 and a half years, Lumen Technology stock is down 96% overall. They were neck and neck with the market until 2012. Since then, things have really gone down the tubes. Lumen stock trades $5 below its 52-week high. Even at $1.56 a share, they trade double their 52-week lows. There's a huge amount of short interest with 14.5% of their shares sold short. Right now, Lumen only has a $1.5 billion market cap, but they use a lot of debt, so they still have a $21 billion enterprise value. The burning question is, why should we be paying close attention to Lumen Technologies? With 450,000 route miles of fiber, including 35 route miles of subsea fiber connecting Europe, Asia, and Latin America, Lumen Technologies is one of the United States' largest telecommunications carriers serving global enterprises. Its merger with Level 3 in 2017 and divestiture of much of its incumbent local exchange carrier or ILEC business in 2022 has shifted the company's operations away from its legacy consumer business and toward enterprises, which now contribute 80% of sales. Lumen offers businesses a full menu of communication services, providing co-location and data center services, data transportation, and end-user phone and internet service. On the consumer side, Lumen provides broadband and phone service across 37 states, where it still has 4.5 million broadband customers. Now, with that understanding of the shift in their business, let's look at their financials inspired by Warren Buffett as we use the Select 6 analysis. Starting with metric number 1, we want their average return on capital in the last 5 years to be above 14%. A normal business earns around 7% returns. Lumen's returns have been increasing in all 5 years over this time, from 5.5% in 2018 to around 9% today. Still, when they're averaged out, Lumen earns around 7.7% returns on capital in a given year. While just very slightly around it, this is pretty average. It's an X on metric number 1. In metric number 2, we want to see growth for the business. In this time, Lumen has been declining. Their sales are down 34% today. Their earnings, which aren't as illustrative for telecom companies, have gone from being negative in 2018 to even worse today when we include their last 12 months. They had a $12 billion impairment of goodwill that really killed this for the business. Their free cash flows, which were positive in all of the last 5 fiscal years, in their last 12 months today are now negative. This is because of a $2.6 billion charge in their other operating activities. That's something you need to dig into and learn more about for this business, especially as they're trying to divest from legacy businesses. Still, all 3 of these are down. This means it's another X on metric number 2. In metric number 3, we want to see earnings per share growth. This looks at Lumen from the view of an individual shareholder. In this time, their earnings per share were negative in 4 of the last 5 fiscal years. Today, they're even more negative because of their impairment of goodwill. Perhaps what could be a huge waste of money, Lumen has actually bought back 7.5% of their shares outstanding, although the company has bought back more shares in their last 12 months than they have over the rest of this time. That could either be really good or really bad depending on how Lumen turns out. Still, even with these share buybacks, their earnings per share are down. It's another X. So far, we're still looking for our first check. Will the rest of their financials look better? Metric number 4, we want to see free cash flow per share growth. This is similar to our last metric. We learned Lumen's free cash flows have gone from being positive in all 5 of the last years to today they are negative. These free cash flows were declining even going into their last 12 months. Because of this, it's another X on metric number 4 despite their share buybacks. Lumen's consumed 91 cents of cash for each share that they had outstanding in their last 12 months. So far, we're 0 for 4. So far, Lumen's 0 for 4. Before we look at their balance sheet and get into our valuations, how about we check in on our bonus? As our bonus, we want their dividends to be covered by their free cash flows. This was actually the case in all of their last 5 years. Lumen had cut their dividends as their free cash flows were declining. Their free cash flows are negative today. Lumen totally cut their dividends because of that. That's likely a good decision by management if they're able to right the ship for Lumen, as they can allocate these cash flows in a better way for long-term shareholders. It's either that or try to liquidate the business altogether. So even though Lumen might have upset some income investors who are interested in the company because of their high dividend yield, it's likely the right choice for the company long-term. Lumen doesn't pay dividends today, so we can't technically give them a check on this, but it's not an X either. Again, likely a good decision for management. In recessions, it's businesses with too much debt that can have the biggest losses and even go broke. In metric number 5, we want their net debt to be below the sum of their free cash flows in their last 5 years. Lumen has aggressively tried to reduce their net debt in the last couple of years. They brought this down from $35.5 billion in 2018 down to around $20 billion today. In this time, Lumen has had positive free cash flows in all of the last 5 years. When they're added together, Lumen actually brings in around $15 billion of free cash flow. That's not super far off here, and Lumen does have a lot of fixed assets that could potentially be levered up as they're a telecom business. But the real problem comes from the company having negative cash flows today as they're divesting from legacy businesses. Lumen could be a melting ice cube if their shift to serve enterprise customers doesn't pick up. Their free cash flows don't totally cover their net debt, and Lumen's free cash flows are negative today. It's an X on metric number 5. Now with that picture of Lumen, what are they potentially worth? The big metric of them all, metric number 6, we want Lumen's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. If this is the case, it gives a slight risk premium to the yield of the 10-year treasury. Right now, Lumen has a $21 billion enterprise value. They only have a $1.5 billion market cap. Enterprise value adds their net debt and their market cap together to look at Lumen more like it's a private business. In the last 5 years, we learned Lumen brought in $15 billion of free cash flow, even if it's negative today. This means they brought in $3 billion in an average year over this time. When we divide that by their enterprise value, we get a very high 14.3% average free cash flow to enterprise value yield. That's way above the yield from the 10-year treasury. The caveat to this is that Lumen is through and through a turnaround story, and they're banking on a shift to serve other businesses rather than consumers. They have a negative current free cash flow yield, but we're looking at an average here. So technically, coming in all the way on metric number 6, it's our first and only check of the day. Don't just run out and go buy their stock. We're still going to look at 2 other valuation estimates before we put these all together at the end of our video and give a rating, which you don't want to miss because it just might surprise you for Lumen. Everything we've covered so far is important, but there's something missing. It brings us to use a discounted cash flow valuation to estimate their fair value per share. We're taking an average of their last 3 years of free cash flow, then using historical assumptions to project these into the future. It's up to you to figure out if this will be accurate for Lumen or not. They've had very low predictability as they've sold off legacy businesses and their stock price has continued to crater. They've had positive free cash flows, which isn't the case today, so that's something else to keep in mind. You need to do your own research. If we assume that their free cash flows decline at 12% in each of the next 10 years, then in the following decade, we'll assume that these decline at 8% annually. We're also going to use their tangible book value, which in this case is negative, to estimate their net worth. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, at today's valuation multiples, a DCF for Lumen gives a fair value of around $1.08 per share. That's down from their current stock price. Right now, Guru Focus gives Lumen a fair value of $8.53 per share. This suffers from their same lack of predictability. This GF value uses analyst estimates for the future and where Lumen has traded compared to their past. Lumen trades very low compared to their sales, but the company's not profitable. That's the big issue here. If that profitability can come back, then this could potentially be a steal. So far, we've covered most of the numbers that Buffett really cares about, but it's the qualities of a business that are even more important to him. Let's learn what these are for Lumen. We're going to start with the long thesis first. Number 1, after selling much of its ILEC business, Lumen may be able to return to sales growth over the next few years rather than face perpetual decline. Number 2, Lumen has further shifted its business away from the declining consumer and toward the enterprise, which leaves it with a better chance for future top-line growth. Number 3, the explosion in data use, particularly mobile, could make fiber assets much more lucrative than they have historically been, and Lumen's fiber holdings place it in the top 2 or 3 in the United States. But as we've seen, it's not all sunshine and roses for Lumen. Let's look at a short thesis as well. Number 1, Lumen may be in a death spiral, and its dangerous financial position could make it impossible for the stock to recover even if the business improves. Number 2, with the substantial amount of Lumen sales coming from landline phone and other legacy services, sales and profits may continue to decline into perpetuity. Number 3, Lumen intends to ramp up investment in its business, which has been in a secular decline. This could be a waste of cash that could instead go to shareholders or debt reduction. Lumen Technologies isn't owned by any super investors, but there have been some big open market insider buys. Their CEO, Kathleen Johnson, bought $1 million of shares in early November of 2023. This was followed up by $500,000 in shares by their executive vice president and CFO, and $100,000 worth by one of their directors. So Lumen's top brass is putting their money where their mouth is. Still, Lumen has had a history of insider buys, and their stock has still struggled despite that. This far in our stock analysis of Lumen Technologies, stock ticker LUMN, we've learned Lumen goes 1 for 6 on our Select 6 analysis. They only look attractive if they're able to return to profitability. That's a big if for the company, and we saw signs going both ways. When we combine our 3 estimates for Lumen to give them a fair value, today this comes out to $3.94 per share. That's more than double Lumen's current stock price. It's where they've traded within their last 52 weeks. It's also above their street target price of $2 a share. Lumen is very unpredictable, so this isn't financial advice. Because of what their business looks like and the turnaround story happening right now, Lumen is a possible value trap that you want to think twice about. It's too hard to call it either way. If you enjoyed today's Lumen stock analysis, share your thoughts in the comments and watch this next video. It might interest you.